In this video, traders, we're going to look at what's the point in lagging indicators. Stay tuned. Hey traders and investors, a very warm welcome to you. So I see a lot of people actively searching for non-lagging moving averages, non-lagging stochastics, non-lagging this, non-lagging that, thinking that they need a non-lagging indicator to use as some kind of holy grail. But let me tell you this, guys, indicators are made up of prior price. That's generally how they're made up. Yes, of course, there are some indicators that are based on price now, but there's not enough data there. One price point has to be used in relation to another. So if you look at moving average, you know, you've got day 1, 2, 3, 4, 5, going back to day 20 or 100, whatever period moving average, it has to take all that data in to give you a moving average. Sure, there's exponential, which is going to add more weighting to kind of price action nearer the current point in time. And there's also other moving averages as well that do that, and other stochastics types and non-lagging things which add more weight, exponential, what have you. But they still need all that data. But many people dismiss it and say, well, you know, if I take a moving average crossover, you know, the fast crosses over the slow, and I go here, by that time price is way down here. Yes, because you're taking price back, you're taking data that's from back here. It doesn't mean it's useless. This is what I want to get to in this video, guys. The point of lagging indicators is to give you a kind of broad, low noise overview of what has happened in the past to give you an idea of potentially what happened in the future. That is generally what charting and technical analysis is all about. If you're constantly searching for non-lagging, you're basically removing the whole theory that the past can in some way predict the future. Now, I'm very cautious with that statement because I know a lot of you are going to say, hey, it doesn't work like that, it can't predict the future, and I get it, you know, but the market does actually go in patterns. This is how we make money as traders. We look for patterns that repeat themselves over time or repeat themselves more often than not. So when we see X, Y, and Z, we know that this is going to happen most of the time, or a lot of the time, or the risk reward is going to be in our favor, whatever it may be. And that's the whole premise of it. So what's the point in lagging indicators? The point is, guys, is it uses and allows us to see in a nutshell what has happened before. And the most important thing is we can use it as a filter. Let me just get my cloth and I'll wipe this out. We can use it as a filter. This is what I want to talk about in this video. Indicators, lagging indicators like a moving average, like that example there where the moving average, let's say the moving average crossed over and there's your crossover point, but price is already way up here and you're like, well, I'm chasing it. Okay, don't use it then as a trigger. Don't use anything that lags specifically, which is the majority of indicators. Now, I'm not talking about when price is touching one another, but these kind of signals like a moving average crossover, maybe a slow stochastic, whatever it may be. If it's lagging, then use it as something different. Use it as a filter and say, hey, you know what? I want to only go long when this is above the slow, the fast is above the slow, or whatever indicator you're using. If price is above my moving average, then I'm using it as a filter. Problem people have is, and that's why they look for non-lagging, is they're using it as a trigger. It's not designed to be used as a trigger. You know, if you're using two slow moving averages, you're going to be way behind the curve. You're pulling the trigger on something that is calculated way back, and by the time the average catches up with it, price is doing something completely different. Price could have topped out and been reversing on you by the time you take a trigger. So don't use anything that is obviously lagging. I'm not going to go through all the lagging indicators here, guys, because you know changing some settings can make things lagging. I can use a 2-period moving average and a 5. That's not very lagging, but I can use something more sensible that has less noise in it, like a 20, 100, whatever. You're going to get lagging kind of signals from it. So you don't use it as a signal or as a trigger, you use it as a filter. And then you use non-lagging stuff like how price reacts to other price as actual triggers. So you use a combination of two. That's when the most powerful trading strategies come from. They come from when you use the power of indicators that look at the past to try and extrapolate or guess or estimate what's happening in the future. You've had 100 days of uptrend. Is the 101st, 2nd, 3rd going to be up? probably the chances are, if you're in an aggressive uptrend, the chances of it being an up day the next day are probably going to be quite good, or whatever pattern it may be. So this is why we say, okay, well, I'm just not going to take shorts now. I'm going to use these as a visual filter. And when you're ripping through your stocks and your commodities and your currency pairs and whatever it may be, you can use these as a kind of way of saying, hey, I want to stay long. How are we doing visually? Or you can have an algorithm that spits out the things that are above, uses a filter system to show you the things that you need to do. So don't need to complain about lagging indicators. Don't look for a solution to unlag them, because there is no unlagging of them. And yes, there are indicators out there that are supposedly non-lag, but by the very nature of them, they're using prior price to come up with the current price. So there's always going to be some lagging element. Yes, they reduce it, and we talked about that earlier, but there's always going to be some lagging element. But use those for different purposes, except they are lagging, but use it as a filter as opposed to a trigger. And then use stuff like, you know, highs breaking, finite numbers being crossed, actual things that you can actually see X equals Y happening. Use that as a trigger and combine that with your lagging so-called useless indicators. A lot of people don't like them because they're using them for the wrong thing, and then use that as a most powerful tool that you can. So that's something to think about, guys. Lagging indicators, there is a point to them. They are useful. Just use them for the purpose that you can get the most value out of, as opposed to trying to use them for something which they aren't that valuable for. Take care. See you next one. Bye-bye.